Hello everyone. Today we are going to see what is meant by auditing, then meaning and definition of auditing, features of auditing, objectives of auditing. Okay. First, what is meant by audit? Audit is an examination or inspection of various books of account by auditor, followed by the physical checks of inventory to make sure that all departments are following the documented system of recording transaction. Okay, audit means the examination which doing the person or so the external person or internal person doing the examination of various books of account uh, that various physical documents are maintained with the all the departments. Okay, and recording and systematic recording of business transaction is happening. Okay, it is done for a certain accuracy of the financial statement provided by the organization. Audit can be done internally by the employee or okay, audit can be done by internally by the employee of the organization or externally by the externally by the independent auditors. Okay, the idea is to check the and verify the accounts by the independent authority to ensure that the all books of account are done in a fair manner and there is no misrepresentation of fraud that being conducted. All the public listed firms have get their accounts audited by the independent auditor before they can declare their result for any quarters. Okay, then what are the features of features of auditing? Auditing is the systematic and scientific examination in the books of account of the business. Audit undertaken by independent person or body of a person who are duly qualified for the job. Audit is the verification or the result shown by the profit and loss account and the state of the affairs are shown by the balance sheet. Audit is a critical review of the system of accounting internal controls. Audit done with the help of vouchers, documents, information and explanation received from the authorities. These are the various objectives of auditing. Features of auditing. The next one is the objectives of auditing. The main objectives of primary objectives of auditing is to examine the system for if internal checks. Then the second objective is the arithmetical accuracy of the books of account, verifying the posting, casting and balancing etc, verifying the authenticity and validity of the transaction, checking the proper designation between capital and revenue nature of transaction, confirming the existence and value of assets and liabilities. The subsidiary objectives of auditing is to detect and prevention of the error. The auditing is done to detect and whatever are the error that are happen by mis happen by misrepresented or by mistake. Okay, then to prevent these types of error. Second one is the detection and prevention of the fraud. Fraud are those makes by committed knowledgely with some of a wastage interest in the direction of top level management is called as for that detection and prevention of fraud auditing is done. Third one is the under or overvalue stocks to maintain the stock level and it should be checks internally by or externally by the auditors to control such a types of frauds. Other objectives is to provide information to the income tax authority to satisfy the provision of the Company Act to have normal effect. Next one is the advantages of auditing. First one is the assurance to the owner and investor. It is the biggest advantage of auditor. It assures the owners as well as the investors to that the business is going in proper direction without any fraud in accounting process. It's satisfying the working of the various department that overall efficiency of profitability of their business operation. It also helps in to minimize or prevent the errors and fraud. Then the independent viewpoint. Next one is the moral check. One of the other advantages of the auditing is in the staff is that workers of the company do not try to steal or defraud the company. Stakeholders confidence. After the auditing, stakeholders like creditors, investors, banks, and debitor holders can rely on the books of account with more confidence. Okay, they can check these books of account and have their right to invest that particular company or make a faith on that organization. The next one is the limitation of auditing: cost factor, time factor, and inclusive evidence.